Today, I want to discuss the recent developments with Roaring Kitty and how his actions have left short sellers in a precarious position. In my previous video, I explained that Roaring Kitty has exercised his calls and acquired a substantial number of GameStop shares. Roaring Kitty, also known as Keith Gill, now holds over 9 million shares of GameStop. This is significant because it mirrors Ryan Cohen's initial purchase of 9 million shares in August 2020. Peruvian Bull has highlighted this similarity, suggesting that Roaring Kitty's purchase was intentional and aimed at supporting GameStop's transformation. Hey, welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But everyone remember, this is not a financial advice video. Roaring Kitty's shift from short-dated call options to holding shares indicates his commitment to GameStop's long-term growth. He intends to help reinvent the company and guide it towards significant expansion. Drawing parallels to companies like Tesla and Nvidia, which faced similar struggles before becoming industry giants, Roaring Kitty's strategy could potentially lead GameStop to similar success. Both Tesla and Nvidia were once undervalued and near bankruptcy, but eventually became some of the largest companies in the world, with their stock prices soaring to over $1,000 per share. Roaring Kitty's substantial shareholding means he now has to file forms with the SEC, possibly paving the way for a seat on GameStop's corporate board. This would allow him to participate in corporate decisions and contribute to GameStop's growth strategies. Dave Lauer has tweeted about the specifics of Roaring Kitty's recent transactions, clarifying that he sold his call options to purchase shares rather than exercising them. Regardless of the method, the end result is the same. Roaring Kitty has significantly increased his shareholding. This requires market makers to locate and deliver the shares, whether through exercising options or fulfilling purchase orders. Silv has provided further insights into the implications of these uncovered calls. According to his tweets, Keith Gill's purchase of 5 million shares and 12 million shares worth of short-dated calls, now updated to over 9 million shares, has had a profound impact on the market. By broadcasting his position weeks before the option expiration, Roaring Kitty demonstrated his conviction, influencing others to follow suit. When he sold his calls and bought shares, it reduced the market's liquidity, making it even harder for market makers to locate and deliver shares. Silv explained that the open interest in these calls remains high if they were bought by new market participants rather than the original market makers. Only a third of Roaring Kitty's options actually closed out, leaving many institutional investors holding calls that need GameStop's stock price to exceed $27 to break even. To hedge their positions, market makers may have to buy additional calls, potentially driving the stock price up even further. This situation creates a potential feedback loop where market makers are forced to buy more calls to cover their existing positions. If the stock price rises significantly, it could put many options in the money, creating a cascading effect. Silv speculates that this could push GameStop's stock price over $128 per share, a scenario that would be fascinating to watch unfold. The broader market has also taken note of the volatility surrounding GameStop and AMC. The Fear and Greed Index indicates that the market is currently in a state of fear, despite the S&P 500 reaching new all-time highs. This unusual discrepancy suggests that investors are wary of potential disruptions in the market. Adding to the intrigue, the Bronx Viking tweeted about a significant purchase of GameStop call options. Someone has invested almost $1.4 million in $32.50 calls expiring next Friday. Whether this is Roaring Kitty making another move or another investor with a large bankroll remains to be seen. This large bet will be something to watch in the coming days to see if it pays off. Despite these developments, short sellers are still urging investors to sell their shares. A recent caller asked Jim Cramer about AMC Entertainment, to which he responded, advising the caller to sell and take their capital out. This advice comes at a time when both AMC and GameStop are experiencing significant volatility, with potential for hitting new all-time highs. Typically, the strategy is to buy low and sell high, not to sell when prices are low, as Cramer suggests. In conclusion, Roaring Kitty's recent actions have created a complex and dynamic situation in the market. By increasing his shareholding in GameStop and moving away from short-dated call options, he has demonstrated his commitment to the company's long-term growth. This has led to increased challenges for market makers and short sellers, who must now navigate a market with reduced liquidity and heightened volatility. The next few weeks will be critical in determining how these developments play out and whether Roaring Kitty's strategy will lead to significant gains for GameStop. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Thank you for watching.